Okay, so let's talk about long-term care today. CFP has quite a few learning objectives. Essentially, when you do the real practice, a lot of details for sure, but for the exam purpose, this is fairly straightforward. Okay, so but it's important to understand a little bit background about long-term care. Okay, so first of all, there are a lot of people 62 or older. Okay. And then around 10,000 people turn age 65. So there are a lot of old folks basically. It's called aging, right? It's even worse in Asia, right? If you go to Japan and China in the next 10, 20 years, you'll see a larger aging issue. So this is the overall age structure. That's why they need a lot of financial planners, because most financial planners work with people in retirement. Okay, and then a lot of long-term care facility will be also in good business because people are aging. It's not easy to take care of an adult. Okay, I know how many of you guys have kids. You know how hard it is to take care of babies, but for babies, at least they're getting better every day. They're getting more mobile every day, right? When you take care of adults, it's just gonna get worse every day. So it's hard, okay? And also that's why it's expensive. It's super expensive in the US, okay? It ranges from 60 grand to 120 grand. This is after tax, okay? So think about it. I cannot pay. I cannot even pay this. Okay? There's no way. Even with my salary, I can pay $60,000 after tax money for my any of my parents, right? Or there's no way. It's just too expensive, unaffordable to me. So 70% of people over age 65 will need some type of long-term care. Okay. So let's look at the overall risk, right? Always worry about fire, like homeowner insurance, and then car accident. Those are relatively small probability, but if you think about like long-term care needs, probability is very high. Okay, especially high for women. So these numbers can be interpreted a little bit differently, but it tells a pretty straightforward idea. Okay, or the point. The probability is fairly high, the risk is fairly high. So what is long-term care? It's a range of personal care and supportive services a person might need if they were unable to care for themselves because of all kinds of reasons. Okay. And then we have traditional medical care. Traditional Medicare would be treat illness. However, long-term care is not going to treat you. It's just take care of you or your clients. Does not attempt to improve medical condition, but rather helps to maintain the lifestyle. So this basically you hire a nanny, okay, for an adult. So that's what it looks like. Activity of daily living. A lot of times we care about this. A lot of long-term care products will look at this. Basic things, right? Can you eat? Can you do bath? Can you dress? Can you transfer? Can you go toilet? Okay, all those 1, 2, 3, 4, 5, 6, right? They will say if you cannot do 2 of the 6, then you need long-term care, or your long-term care insurance will pay out. Can be many different types. Okay, when we talk about $60,000, that's a really nice nursing home. Okay, nursing home is expensive. If you don't have the money, you can just do it at home, stay at home, and then hire a part-time like nurse to come to your house. Maybe every day for 2 or 3 hours to take care of you or your client, right? And then you have community-based residential settings. So many states, those facilities are relatively short, and then often long-term care services are provided by family members. This is very important, okay? Even though they will say 70% of people will need long-term care of some extent, however, most of them are short, okay? Like 30 days or so. So that's not the risk we are trying to hedge here, but it still makes sense, or it's still helpful for you to understand that. So if someone has a surgery, okay, it's like your car, right? When it's getting older, you need to fix things. Same for people. When we get older, we need to replace some parts or fix some part. Then it takes time to recover. So a lot of time, like a month, right? That's why you need long-term care. So that's why a lot of them are in with family members at home. Okay. However, if you have a client who need a long-term care, right, more than several months, that's when the true risk kicks in. So we have different types of facilities: private, semi-private, and assisted living, right? Private nursing home with all the medical equipment, they are very high, so it can cost you a lot of money, right? So basic assisted living can be okay. If you stay at home, it's even cheaper, right? And then how do we pay for it? We have Medicare, Medicaid, and then you can use your own assets. I don't recommend it unless you can't have a lot of money. You can do long-term care insurance. We will talk about Medicare. Sorry, we'll talk about that later when we talk about Social Security. But just basic information, right? Medicare provides some long-term care needs. Medicaid provides some long-term care needs. Sorry, Medicare, this is what you need to know. You don't think the government will take care of you. That's not really true for long-term care needs. They provide some short-term, like I think they do have some really short-term coverage, but you don't want to rely on them. Within 30 days, let me see. Pay, okay, this is what it says. Short-term stay in skilled nursing facility if the meets the following conditions, though they have very strict conditions, okay. So basically you have to get a surgery and then you can will not pay for some of the cost up to 100 days. Okay, Medicaid is what people rely on a lot of times. It is a state, okay, a lot of times it's a state, okay. Program pays for medical assistance, so they do pay for it. However, they do have some issues, okay. Let's talk about type of services, okay. So we have all those nursing facility services, okay. So they do provide this type of services. But some people told me that those are not good. So they basically put you into a fairly not a good quality or not like at least private place for long-term care needs, but at least they pay for it, okay. But they do have eligibility. So the eligibility would be you need to have no money, okay. So basically that's what it is for Medicaid. They have those are fine. Those are the rules, right? Like those are probably easy to meet for certain people. However, they do have asset test. I don't know why it doesn't really talk about it here. Okay, it is okay. This is income test. They do have income and then assets. So this is where it is. This is where for clients, income is fine because most people in retirement they don't have income anyway. So they will have assets test. Those you cannot have like basically more than $500,000. Everything included. I think they have some exemptions on house. Okay, does not count house, right? So you have no money checking, no money brokerage account or bank account, no vacation home, no cars that needed. So that's what it looks like. Okay, and doesn't count your house because in the US they think you need to have a place to stay, right? You don't have include life insurance to some extent. So basically those are not necessarily practically useful for our clients because we want them to have money in their brokerage account. However, it can relate to their kids. Okay, so when they have a special needs kids, I think this is what. And also they have a look back period. Okay, you cannot intentionally transfer your assets away to qualify for that because those people are smart people, IRS, and then the state employees are good. I'm a state employee too, so we know what you want to do. Okay. So a lot of time for our clients, we need to create a trust when they have some special needs kids, right? If you have a client with a disabled kid, born or later in their life, then you worry about that. You can give them money, but you still want them to be eligible for the Medicaid. What you do is you can provide the money you want to give them into a trust, so that your kids have no money, right? That's when they can still be eligible for the state Medicaid benefit while still have some income from you even after you die. So we just love them so much. That's why we have a lot of trust products for kids. So you guys should learn this in estate planning anyway. Then we have long-term care insurance. It is an insurance designed to hedge long-term care. However, this profession is getting really out of control. The insurance companies start to phase out. They don't want to do it anymore because they lose money on it, and the medical cost is rising at a pace that is unbelievably fast, right? But if you have clients, right, certainly need it. This is also an option to choose, but you need to know this is not efficient, right? The insurance product itself is not that efficient, but you don't really have a better choice. If they really worry about it, then there can be a need for it. Like when I'm talking, you see that there are a lot of people in the long-term care insurance, they have adverse selection, right? I just give you the same advice, adverse select those, because they are expensive. You do it only when you need it. So there are some factors you need to consider, and this is expensive too. Okay? But our clients, they if they have their needs, this is just a cost. They need to weigh against the benefit. So again, they have different types: skilled nursing care, custodial care, and then home care. Okay, all those different levels, different price tag. A lot of long-term care, I think, are done with a hybrid, right? So they basically stay at home for certain hours, and then they have some like practicing nurse to come and then take care of them or provide some medical treatment. Okay. The good thing about living facilities, they have like 24/7 nursing. That's why it's called a nursing facility. They have all the medical equipment. Okay. For those with wells or a lot of really good pension, right? If you have someone who retired from the military a long time ago, they have really great benefits with a very high pension. And then they can afford it. It's just a better lifestyle when people get old. And we have assisted living and long-term care services. So they do have coverage. Okay, you need to pay attention to how this is paid. So they could have maximum lifetime benefit or total plan benefit, which is totally insane, right? That's why we have insurance, and then they have this maximum cap. So that's not necessarily good. And then you need to pay attention to whether the payment amount will be adjusted for inflation. Okay. So there can be some triggers, chronic illness. A lot of times it's ADL. Okay. Activities of daily living, right? It's 2 out of 6, as I mentioned. So that's what you need to pay attention to, the trigger event. Okay. So those are the 6. There are some alternatives. I think this is getting more popular. A really big life insurance policy. Consider it a long-term care rider. This is more affordable and probably better. It's called a hybrid product. What they do is just provide a rider, okay, with the insurance. Maybe you can use some of. Remember, if it's a cash value insurance product, you can have some of the cash value accumulated long time. You can use that to potentially pay for long-term care. Another will be annuity with long-term care. It's like this is also hybrid. Okay, if you have clients with annuity, I think a rider is probably better. Deferred annuity, it could be if clients worry so much about whether they have enough money in the future to pay for long-term care. You can ask them to annuitize a certain part of their income into a really deferred, like until age like 80 plus, right? You will basically give insurance company $1 million, you receive nothing until age 80, and then after age 80 you receive a lot of money every year. Is that making sense? If people worry so much about it, that's why it's called a deferred income. Defer is very late into life. Many people die at that time. That's why they can pay you a lot of money after age 80. Some people say you can use reverse mortgage. So basically, you have a house, right? Like several $100,000 house. That's one of the largest assets everyone has. And then they say maybe you can just sell your house, right, and then to pay for it. But like you will be like, if I sell my house, where would I stay? they will say, let's do a contract. It's called a reverse mortgage. Okay, I give you the money. Okay, monthly, and then the house becomes mine, right? Like gradually. So when you think about mortgage, right? You pay them every month, and then the house belongs to you more and more every day, right? You just reverse it, okay? They pay you, and then the house kind of depletes itself, okay? That's all I have for today.